Investing is not just about making money. It's about securing your future, and the future of those you care about. Investing, when done right, is like planting a seed today and watching it grow into a tree over time. It's about making your money work for you, multiplying your wealth, and creating a solid financial foundation. But smart investing is not a one-size-fits-all strategy. It's a journey that depends on your individual financial goals, your risk tolerance, and your investment horizon. Some prefer the thrill of the stock market while others find peace in the steady returns of bonds. Perhaps real estate is your calling, or maybe you're looking into the world of mutual funds. And let's not forget about the importance of saving for the future, with retirement funds, education savings accounts, and health savings accounts. Or perhaps you're interested in the safety of certificates of deposit or the reliability of treasury securities. Each of these investment avenues has its own set of benefits, risks, and rewards, and I am here to help you navigate through them all. So buckle up and get ready to embark on a journey to financial freedom with these top 10 best investments for this year. The stock market, a classic choice for investors worldwide. Imagine a bustling marketplace, but instead of fruits and vegetables, we're trading in shares of companies. This is the stock market. When you buy shares, you're essentially buying a piece of ownership in a company. And as the company grows and thrives, so does your investment. It's like planting a seed and watching a tree grow. Now, the stock market isn't a sprint, it's a marathon. It's not about riding the wave of a hot new stock and hoping to cash out at the right moment. It's about investing in solid companies and sticking with them through the ups and downs. Over time, the economy grows, companies expand, and typically, the value of good stocks increases. But remember, the stock market also comes with risks. Prices can fluctuate due to a myriad of factors, from economic indicators to global events. That's why diversification is key. By spreading your investments across a variety of stocks, you can mitigate some of this risk. Remember, the stock market is not about quick gains, but about patience and long-term growth. Bonds, a safer harbor in the investment sea. Imagine lending your money to a corporation or the government. In return, they promise to pay you back with interest after a certain period. That's precisely what a bond is. A loan you make to borrowers who, in turn, pay you interest for the privilege. Bonds tend to be less volatile than stocks, making them a lower-risk investment for those looking to preserve their capital while earning a predictable return. They're the slow and steady tortoises in the race, if you will. While they might not offer the potential for sky-high returns like some other investments, their relative safety and dependability can make them an attractive option, especially for conservative investors. Bonds may not make you a millionaire overnight, but they can provide a steady income stream and peace of mind. Mutual funds, a basket of opportunities. Picture this. Instead of putting all your eggs in one basket, you spread them across several. That's what mutual funds allow you to do. They pool money from multiple investors to invest in a diversified portfolio of stocks, bonds, or other assets. So instead of betting on a single stock, you're investing in a variety of them, spreading out your risk. This idea of diversification is one of the primary advantages of mutual funds. It's like having an all-you-can-eat buffet of investments at your disposal. Plus, you don't need to be a financial whiz to invest in mutual funds. They are managed by professional fund managers who make the investment decisions. These managers have a wealth of experience and use sophisticated strategies to try and maximize returns for the fund's investors. So, if you're just starting your investment journey, mutual funds can be a great way to dip your toes in the water. With mutual funds, you get to ride on the expertise of fund managers and spread your risks. Real estate, a tangible asset with real potential. Now let's dive into the world of property investment. It's all about bricks and mortar, folks. With real estate, you're not just buying a piece of land or a building. You're buying a potential income stream and the possibility of significant price appreciation. Consider rental income, for instance. Whether you're leasing a residential home, an office space, or a retail store, those monthly payments can add up to a hefty sum. And that's not all. Over time, the property itself can grow in value, giving you a nice chunk of equity to sit on. Then there's the aspect of control. Unlike stocks or bonds, where your investment is largely at the mercy of market forces, with real estate, you have a say. You decide where to invest, what improvements to make, and who to rent to. Of course, it's not all sunshine and roses. There are risks and responsibilities involved, like maintenance costs and market fluctuations. But with careful planning and management, real estate can be a solid investment that can provide both income and growth. Certificates of deposit, or CDs, a simple and safe way to save. In essence, CDs are time-bound deposits you make with a bank. with a fixed interest rate higher than your average savings account. Imagine lending your money to the bank for a predetermined period, say 6 months, a year, or even 5 years. In return, the bank pays you interest. What makes CDs attractive is their safety. Your deposit is insured by the Federal Deposit Insurance Corporation up to $250,000. So even if the bank goes under, your money is safe and sound. But remember, CDs come with a catch. The money you put in a CD can't be withdrawn before the maturity date without incurring a penalty. So, if you think you might need that money in the short term, CDs might not be the best fit. Nevertheless, if you're looking for a safe haven to park your money and earn a higher interest than savings accounts, CDs can be a solid choice. CDs are a risk-free way to earn interest on your money. Retirement funds investing in your golden years. Imagine a secure future where you're not burdened by financial worries in your retirement. That's exactly what retirement funds like 401ks and IRAs can help you achieve. These funds are specifically designed for retirement savings and come with tax advantages that make them an attractive option for investors. With a 401k, for example, you make contributions from your pre-tax salary, reducing your taxable income for the year. The money then grows tax-free until you start withdrawing it in retirement. On the other hand, an IRA or individual retirement account allows you to make contributions with post-tax dollars. But then your money grows tax-free and you don't pay taxes when you withdraw in retirement. But remember, retirement funds are not a quick fix. They are a long-term commitment to your future self. They require consistency and discipline over many years. But with time and patience, these funds can grow substantially, providing you a comfortable nest egg for your golden years. Retirement funds are a long-term commitment to your future self. Education savings accounts, or ESAs, investing in knowledge. They say that education is the best gift you can give a child. And with an ESA, you're not just giving a gift, you're making an investment. ESAs are tax-advantaged savings vehicles designed to encourage saving for future education expenses. The funds can be used for a wide range of educational pursuits, from elementary school tuition to post-secondary education costs. But the beauty of ESAs goes beyond the broad application. The earnings in these accounts grow tax-free, and withdrawals for qualified education expenses are also tax-free. That means every cent you save is a cent invested in a child's future, and the earlier you start, the more time your investment has to grow. So, why choose an ESA? Because it's not just about saving money, it's about investing in the potential of a young mind. With an ESA, you're investing in the future by investing in education. Health savings accounts, or HSAs, investing in health. Now let's talk about what HSAs are. These are tax-advantaged accounts, specifically designed for individuals with high-deductible health plans. You can think of HSAs as a personal savings account, but the money in them is used to pay for eligible health expenses. What makes HSAs really shine are their tax benefits. Contributions are made pre-tax, meaning they lower your taxable income. The funds grow tax-free, and withdrawals for eligible health expenses are also tax-free. It's a triple tax advantage. But remember, to qualify for an HSA, you must be enrolled in a high-deductible health plan. This means you'll pay more out-of-pocket before your insurance kicks in. However, the money you save on premiums can be put into your HSA. So why are HSAs a smart choice? Well, they provide a way to save and invest money for current and future health expenses. They can help you meet your deductible and out-of-pocket maximums, providing a safety net for unexpected health costs. An HSA is not just a savings account, it's an investment in your health. Treasury securities, backed by the full faith and credit of the US government. Simply put, they're a form of debt issued by Uncle Sam himself. Now, what makes Treasury securities such a good choice for conservative investors? Well, it's their low-risk nature. You see, when you invest in Treasury securities, you're essentially lending money to the government. And since it's the government we're talking about, the risk of default is virtually nil. They come in 3 flavors: Treasury bills, Treasury notes, and Treasury bonds, each with different maturity periods and interest rates. But regardless of the type, they all share one common trait: they offer a steady income stream. That's right, no roller coaster ride of highs and lows like the stock market. Instead, you'll receive regular interest payments until the security matures, at which point you'll get back your initial investment. So, if you're an investor who favors stability over speculation, Treasury securities could be just the ticket. They offer safety and a steady income, a true sleep-well-at-night investment. So, there you have it, the top 10 best investments. We've journeyed through a spectrum of financial opportunities, starting with the thrilling dynamics of the stock market and the stability of bonds. We've looked at the diversification benefits of mutual funds and the tangible asset that is real estate. We also touched on certificates of deposit, a safe haven for your money. Retirement funds were next on our list, a crucial long-term investment for a worry-free sunset period. Education savings accounts, an investment in knowledge which indeed reaps the best interest. Health savings accounts also made our list because health is wealth, isn't it? Finally, we delved into the world of treasury securities, government-backed, and a secure choice for your investment portfolio. These 10 are not the only options, but they are some of the best to consider for your financial journey. Remember, the best time to start investing was yesterday, the next best time is now. So, get started on your journey to financial freedom today.